Hello guys. Uh, Thank you so much for showing so much of love and affection for the previous videos that we have already uploaded. Today we are going to do a continuation of banking services. Let's do a recap on what we did last time. Last time we have spoken about the banking services which was related to deposits where a consumer deposit money into the account and then the loans that is provided by the banks and so the bank, what they do is they accept the deposit from one set of consumer and then they give out the loans to the other set of consumers. So that's what we have discussed in the last video. Now we are going to extend the banking services to a next level. So we will be discussing about all the banking services or majority of the banking services that a bank provides, right? So let's start and we'll see about what are the other banking services that the bank is providing. First, banking services. You all must be using a credit card or a debit card or an ATM machines, and you might be aware that a payment and transactions are something which a bank is using it. So we will explain you on how payment or transaction functions, right? So here you go. If you will see, we have tried to explain that in a diagram format where you see that the customer gives a consent to pay to the merchant. Of course, when a consumer purchases something from a merchant, he has to make the payment. Instead of making a payment through currency or coins or notes, you can say, a customer prefers to make the payment through plastic money, which is debit card or credit card, or probably through the Google Pay or through iPhone they can make the payment. So here we see that whatever the mode of payment is, whether it's through credit card or through mobile phones or through any of the payment gateways like UPI and so on and so forth, here a customer needs to give a consent to the merchant that he can accept the payment for whatever goods that he has provided. And let's say he gives a consent to the merchant to make the payment. The merchant requests the payment and he sends it to the payment gateway. Now the payment gateway can be any of the payment gateway. There are majority of a lot of payment gateways which is available in the market. Visa and Master is also one of the payment gateway. In India you have something called RuPay, which is also a payment gateway. They request for an authenticate the transaction, so they request for the issuer card network for so that whether they can proceed and authenticate the transaction or not. When they request it, they have to request the issuer cardholder's bank, right? So they need to check with the issuer cardholder's bank whether the balance which the consumer or the customer wants to make it to the or make the payment to the customer, does he have sufficient fund available in the account or the credit card. Once he gets a feedback, the payment gateway proceeds and requests for an authentication, which is nothing but a OTP number. It can be a PIN number or it can be 4-digit or 6-digit OTP. Once the consumer puts those PIN number, the payment gateway settles the amount with the acquiring bank. So what he does is he takes the money from consumer's account and then he makes the payment to the merchant's account. So we'll understand everything in a very simple way as a layman's language. First, the consumer intends to buy something from the merchant. Once he intends to buy something from the merchant, he asks the merchant or he provides a consent or he gives his credit card or debit card to the merchant, and the merchant requests for a payment gateway authentication. The payment gateway checks whether the customer has the sufficient fund available in the account or not, and once the available amount is there, consumer pays the authenticates it through using the OTP, and ultimately the payment gets deducted from his account and it gets credited to the merchant's account. I hope it's clear. Now the second banking services that we have is investment bank or investment services that a customer is providing. You all must have heard about a terminology which is called investment banker. So let's understand what investment bankers do or investment services that a bank provides, right? They provide a brokerage account. Let's say a customer, he wants to deal in shares, debentures, stocks, commodities, and so on and so forth. So for that he needs to have a demat account. Now bank also assists customers to have a demat account, right? So that it acts like a brokerage firm, or probably it provides a brokerage account. Second is mutual fund. There are a lot of people who doesn't have the risk appetite. They don't want to go ahead and invest in shares directly because probably they don't think that they have the expertise to invest in the share market, or they cannot follow the market rigorously, or probably they don't have the risk appetite. They don't want to take much of a risk. So what they do is, like, bank, they issues a mutual fund where you have a fund manager. He takes care, or he gets the accumulated funds from majority of the small investors or small customers, and he accumulates the fund and then he manages it, purchase or invest in different shares and bonds and commodities based on the appetite of a consumer or what fund he has taken. Of course, if a consumer takes more risk, he gets more benefits. If he takes less risk, he gets less benefits. So that's how it actually functions, right? Then retirement account, there are few people who invest money thinking that once he retires, of course there should be an ample savings which will take care of his retirement, right? Because after retirement, of course, your source of income or a customer's source of income comes to a standstill, but the bill has to be paid, the expenses needs to be met, and expenses are real, right? Then advisory services to help customers manage and grow their funds. So we will understand this whole thing in a diagrammatic form, right? So let's understand it. So investment banking, it's a type of bank organizes large, okay, there is one more investment banking that a customer does. Now if you see here that there are merger which happens, today, nowadays, the organizations are complex, the banks are complex, the way the organization or banks or MNCs operate are complex, and it always happens that two companies or two organizations, two banks, they merge or they acquire each other so that they can provide more services to the customer, or they can reduce the losses, or they can enhance their profit. There can be several reasons, right? So bank, they plays a major role in assisting the merger of different organizations. Second is initial public offering. Let's say a person or an organization, let's not talk about person, an organization, he wants to get into or gets the organization listed in any of the stock exchange. In India, you have NSE, BSE. In UAE, you have ADX, which is Abu Dhabi Stock Exchange, or you have in Dubai also you have a stock exchange, and the company wants to get listed. So they need to offer IPOs, which is initial public offering, and to introduce IPO, of course, they take help of bankers as well, and bank to provide that services, they charge certain fees from the organizations. Currency exchange, I believe every one of us who has entered into a bank, they must have seen a board like this where you get to know about what is the currency exchange with all the major currencies. Probably it will not have the currencies of all the countries in the world, but of course the major currencies will always be mentioned, and they will mention the buy rate, the sell rate, and the bank transfer, and all the three rates will differ, right? So this is one of the important banking services which bank provides, and you will find this on a screen in any branch that you enter. Safekeeping of valuables. Every individual will be having some valuables or the other, and it's not safe to keep the valuables at home, right? A person may have valuables. What can be the valuables? Number one, the documents, probably the property documents. That is important. Instead of keeping a property documents at home, people prefer to keep it in a safe chug. Then jewelries, of course, a person will not be keeping jewelries at home. and they should prefer keeping jewelries in their bank lockers or safe jars. Okay, and there are other valuable possessions also, something which is so valuable that it needs to be kept in a safe jar or bank lockers, you can say. So these are all sensitive, or these are all priceless priceless documents which has to be kept in a safe custody or in a safe keeping or in a safe jar or in a locker of a bank, right? So generally the locker looks like this, and it is of course protected from fire or any mishap that can happen. It can be natural, it can be man made. Natural disasters can be like earthquakes, or man made disasters can be probably fire that can erupt, right? So we don't know what mishap can happen when, and that's why it has been kept in such a safe chug or a deposit box or locker that despite of fire or any natural disaster, it doesn't get destroyed. It can be kept safe, right? Okay. Next one is financial advice. Financial advice is something that a customer needs it on a regular basis, and bank provides that. For example, managing their finances, plan for retirement, and let's understand what are the financial advices that a customer can get from the bank. Like let's say for example savings advice. A customer wants to save certain funds. He can have a savings account where he can save it. He can have a recurring deposits where he can save and get an interest after a certain point of time, or he can get into FDs and so on and so forth. Then retirement plan, a customer can opt in for a retirement plan depending on what his expenses are and how much he will need once he retires, for a monthly basis or a daily basis or an annual basis. Then mortgage guidance, that is also one of the financial advice which customer gets from the bank. Mortgage, like which property he wants to buy, or when he wants to buy a property, or by when he wants to clear all his EMIs, so he becomes the owner of the property and the mortgage gets over. Insurance guidance, of course, insurance is also important. There are different forms of insurance which we will talk about later, right? Assistance with taxes. A lot of countries have taxes. Taxes are an important source of income for any government, and an individual, whatever he is earning, he has to pay a certain amount of tax to the government, which can facilitate government to run the country in a proper way. So they can guide him on how to save taxes or how to optimize his income and how to increase his savings. Then downsizing advice. There are certain downsizing advice also which can be given to an organization so that they can make profits and so on and so forth, right? Risk management. Risk management is really important. We all know that every person, organization, or anything and everything in the world is subject to risk. Now, how do we minimize the risk, or how do we mitigate the risk is really very important. Customer can manage risk through hedging instruments or insurance products, but organization or bank or corporate, how do they manage their risk is different perspective, which we will try to understand through a diagram. So let's see, like as an individual, even as an individual, how do you mitigate your risk? You should learn it through the diagram. So first is what we need to do is we need to identify risk. What is risk is something which is important. Once you identify, it means your problem is going to get solved, because identifying a risk is really very important. Once you identify a risk, you have to analyze how grave is the risk, how big is the risk, how difficult is the risk, or how simple is the risk. So once you have analyzed it, you have to take action accordingly. And once you take an action, you have to monitor on the action that you have taken on the risk, whether it's working in resolving the risk factor or it is like creating more adverse situation. So an action, and then you need to monitor. Once you monitor and see that it's working and it's ensuring that the risk is mitigated or managed, then you put that control in place. Once the control is in place, then the risk is minimized, it becomes negligible, or probably the chances of risk reduces. Okay. Corporate and institutional banking. Bank also provides clients for corporate and institutional banking, like they provide clients business loans, cash management, trade finances. These are the things which a bank also provide. Now, to run a business, as we have explained in the last video, that a person needs business loan to ensure that his business runs on a efficient and effectively, and he doesn't have any issues regarding finances, and bank charges a nominal fee or an interest rate to provide the banking or business loans, right? So second is cash management. Bank also plays an important role in doing a cash management. If you will see here, like in cash management, the roles and functions of the bank is that they provide inventory management. The inventories are managed. Okay. Then second is receivable management. Whatever an organization is going to receive from his clients, bank manages that. And even the payable management, whatever payment that a bank does for the to his clients, or to his from whom he has made a purchase or he has bought stuff. Okay, that also is being managed by the bank. Then is trade finance. So we will understand how trade finance functions. Bank plays a major role when an organization gets into an international trade, because of course the risk of international trade is high. If you see here, a seller is selling the goods to the buyer, so the goods is sent to the seller. Now the bank and the seller needs to secure themselves. So buyer, what they do is they make the payment through cash to the bank. There are complex ways of doing a transaction on trade finance also, which we will be learning in a later video. Let's now understand in a basic way, basic concept as a layman. So seller, he has sold the goods to the buyer, and buyer, before he receives the goods, makes the payment to the bank in cash, and then bank make the payment to the seller. This is a simple format of trade finance. The complex format we will be learning later on, but that's how the transaction happens. So the trust factor or trust deficit that a seller and a buyer have on each other is being taken care, because bank plays an intermediary role. What are the trust issues that a seller can have? Seller can have a trust issue where he may think that he has sent the goods or he has sold the goods, whereas once the good is received by the buyer, he might not make the payment. Or the trust factor which buyer can have is that once he has bought the goods, in that scenario, it may happen that he has made the payment, but the quality of good that he has requested is not up to the mark. So bank, it plays an important role. It becomes the intermediary channel where it ensures that the quality of good which has been requested is optimum, and the seller also gets the payment on time. So these are the few banking services that we have already discussed on, and going forward we will be discussing on the other topics. Thank you so much guys for being such a great audience, being so patient with us. If you have really liked the video, please do share, subscribe, and don't forget to press the bell icon. Thank you so much.